Donald Trump's latest tariff announcements sparked the worst one-day stock market crash since the pandemic, and it lit the fuse for retaliatory tariffs from other nations, including China, the European Union, and Canada. This sent the global markets into freefall, and the S&P 500 posted back-to-back days of 5+ percentage point plunges, erasing trillions of dollars in wealth. But unlike what's been the case in more recent dips, no companies are being spared. The usually unshakable Apple is down over 16% from its close on Wednesday. Meta is down over 14%. Amazon nearly 13%. Netflix 10%. Disney 15%. Starbucks 17%. Texas Instruments 15%. The list goes on and on and on. And we're talking about crucial, reliable companies that are the backbone of the economy, getting absolutely slaughtered. According to JP Morgan, the likelihood of a global recession in 2025 is now 60%, up from 40% just a few days ago, which was already up 10% from when Trump took office. And the key word being thrown around here isn't tariffs, it's uncertainty. My name is Paul, and I've been investing $100 of real money into Canadian securities each month on this YouTube channel for over 3 years, with the goal of highlighting the investment journey of a hypothetical Canadian who will never be able to max out their tax-free savings account. My hypothesis is that people who only have a little bit to set aside at the end of each month can still achieve financial freedom by following a disciplined plan of investing what they can on a consistent basis. So make sure to stick around to see how the journey has been going so far. Now, I'm sure that the vast majority of you are already well aware of these new reciprocal Trump tariffs that have triggered this recent crash. These new tariffs were announced on the 3rd, almost immediately after the market's close, and then on the 4th, other countries responded. And in many of the important instances, these countries responded with their own counter tariffs. Instead of getting into the fairness or sensibility of the specifics regarding these tariffs, I want to instead talk about the impact. To do that, I'm going to be focusing a lot on the word that I previously mentioned. Not tariffs, uncertainty. The fact of the matter is that no one knows what Donald Trump or his administration are doing. At this point, I've seen hundreds of different opinions on Trump's plans, from those clutching onto the hope that he's got some secret master plan that he's holding on to that he doesn't want others to know, to defectors who are now believing that he tricked the people just to enrich himself and other billionaires like him, to longtime critics who are claiming that he's a Russian plant or just a famous narcissist who's gotten in way over his head. Either way, this uncertainty as to what Donald Trump's true intentions and beliefs are leaves a massive void that fills everybody with a feeling of insecurity. See, even if we take the most charitable interpretation of Trump as a master tactician who is using these tariffs as a way to control the world's nations, to get them to cave into his terms of building more businesses in the United States and dropping all of their tariffs on US goods, there are still massive strategic oversights happening. Firstly, it's a huge gamble with not great odds. For instance, if the nations hit with tariffs don't capitulate and instead levy their own counter tariffs, which is what we're seeing from many of the US's major trading partners at the moment, then Americans are going to be stuck with lose-lose trade relationships and worse overall sentiment from other nations that Trump supposedly wants free trade with or business investments from. What's worse is that if the other nations don't back down, it's going to be very difficult for America to go back to the way those relationships were. Unfortunately, Trump has put himself into a position where if he removes the tariffs and asks to go back to the way things were, he'll look weak in front of the whole world. This makes America seem less competent as a nation and will likely embolden US adversaries who will probably conclude that Trump will just back down in the face of adversity. Additionally, there's that uncertainty aspect. Seemingly, no one knows what Donald Trump actually wants or what kind of moves he's willing to pull, and this makes the US as a nation more risky to partner with and to invest in. To give you a quick example, imagine a bunch of your buddies agree to bring a different food over for game night, and the day of, one guy decides he's going to hold the pizza ransom unless everybody else brings extra so that he can take home all the leftovers. And he's not joking, he's serious about it. Even if the guy ends up apologizing and saying that he's sorry and that he doesn't need the leftovers and that he'll share the pizza, the next time around you're definitely going to be a bit more on edge about trusting him with bringing something. Instead of being excited about game night and hanging out with friends, eating good food, you're going to be spending time thinking about what scheme this guy's been plotting. And the same goes with the tariff situation. The trust here is gone, even if Trump removes the tariffs and apologizes. Everyone else is still going to be sitting around wondering what he's planning and how he's going to try and screw them over next time. And that lingering negative uncertainty doesn't inspire a desire for investment or partnership. Going back to the game night analogy, most people aren't going to want the guy who tried to pull a fast one on them to be in a position to host game night at his place, especially if that's something that he's been asking for insistently. Similarly, most countries who have been friendly with America in the past aren't now going to want to put more assets into the States after getting slapped with tariffs. Now, one of the popular arguments is that the US is the strongest economy in the world and that it will be able to hold out longer than everybody else, and that Trump will force the world to come to the negotiating table. And while that is true, America is the world's largest economy, and it would likely be able to throw its weight around to get almost any other country to bend to its whims. Trump hasn't simply pitted himself against a single country. He's facing off against the entire world. For instance, the European Union and China combined make up a larger percentage of the global economy than the United States. Then add on top some of the US's other major trading partners who also are not taking these tariffs lying down, and the US is clearly not in a position of power here. Additionally, these tariffs will push nations to build new trade relationships with countries that they might not have even considered partnering with before. For example, Canada and China haven't always seen eye to eye in the past when it comes to the sale of Chinese vehicles in Canada. And that's because of issues regarding the protection of Canadian auto worker jobs, security concerns, and maintaining good auto trade relations with our US partners. Well, if our US partners are harming our relationships by implementing large tariffs that will negatively impact our car manufacturing jobs, maybe Canada will decide to embrace an auto trade relationship with China. The cars would be cheaper and more affordable for Canadians, and China would likely import more Canadian goods as trade relations grow, and as China seeks to replace a lot of what it buys from America. This building of new trade relationships to work around the negative impacts of American tariffs will likely happen with many of the world's major economies over the course of several years. And it's in this way that it is very possible that Trump's attempts to force everyone to come to him will actually end up being what exiles America from the rest of the world. Unfortunately, if this continues to go on long enough, the United States will lose its image as a stable and democratic nation, which, in addition to doing less global trade, will mean less of a desire for US currency. And this could spell the end of the US dollar being used as the global reserve currency, which would make the American national deficit a much more serious and risky situation. In reality, things probably won't get that far, since polling from before the market crash shows that Donald Trump's approval rating was already dipping well below 50%. And since then, we've even seen US Republican pundits pushing back against the sensibility of this recent round of tariffs. So we'll probably see the Trump administration change course yet again, if not suffer in the court of public opinion. But uncertainty is the name of the game, so we'll have to wait and see what is going to happen here. In the meantime, watching the world's largest economy self-immolate is going to be painful for everyone. In the video's intro, you saw some of the major US companies that got fried. But Canadian companies that do business with or source goods from the States are also getting burned pretty badly. Shopify is down 24%, Brookfield is down over 15%, Manulife down 15%, Canadian National Resources is down almost 13%, and that's just a few of the bigger ones. As for my portfolio's holdings, let's start off with the worst performer. M2I Food Group is down 8.64% over the course of the month, but the recorded end date for March was as of the market's close on Thursday, and the second leg down of the market crash came on Friday, so things are actually quite a bit worse than they look here, with shares currently trading below $40. Meanwhile, GoEasy was down roughly 4% as of the close on Thursday, but is now trading considerably lower in the $140 range. Lastly, the Morguard North American Residential REIT appears to have held up pretty well, only dropping by about 1% over the course of the month. But as of recording this, things are, again, worse than they appear, with shares currently trading in the mid-$16 range. Yeah, you know it's going to be bad news when the best performer of the month has declined. It was going reasonably well right up until the last day or so. We technically ended the month with $4,053, which is down $75 or 1.83%, but that does factor in over $200 in reinvested dividends as part of the book value. But I've only put $3,900 into the account on Wealthsimple, so we're actually technically up by about $153 on my contributed capital, at least as the markets end on the 3rd. But I'm sure that things will look quite a bit worse once we get into the account to invest into this plummeting market. And as you can see here, the benchmarks really didn't fare any better. And again, none of Friday's numbers have been factored in yet. And yeah, it looks really bad. The S&P 500 has already given up huge gains and is right back to within a couple $100 of the competition. Meanwhile, the Canadian equity funds appear to have held up pretty well. They did benefit from a well-timed quarterly dividend payout, which helped a bit, but so did the S&P 500, and it's still where it's at. Meanwhile, the global value ETF, represented by the pink line, has completely dropped off and won't receive any dividend help until the end of the year. Then we have my portfolio, the green line, all the way down at the bottom, and it fared about as well as the two Canadian ETFs, a slight decline, but nothing like the internationals. Unsurprisingly, this month did not make us any progress towards the red line with the stars, which designates a 12% annual return on investment. But at least we aren't the only ones below the line now. Anyway, the portfolio will need to increase by approximately 15.8% in order to get back in line with our goal. Luckily, drops like we're seeing today that are driven by fear and uncertainty do provide good opportunities to get quality businesses at cheap prices when investing for the long term. And the three companies that I've been buying in the past and will buy again today are all solid, profitable securities that are reasonably tariff resistant, as I've explained in this video. So with this month's $100, as well as the dividends that I received in March already in the account, I first picked up 4 shares of the Morguard North American Residential REIT for $16.70 each. Then I purchased 0.1764 shares of GoEasy at a cost basis of $141.68 per whole share. And finally, I picked up an additional 0.4766 shares of M2I Food Group at a cost basis of $39.40 per whole share. So, as of the market's close on Friday, April the 5th, the portfolio has 175 shares of the Morguard North American Residential REIT worth roughly $2,858, about 18.3 shares of M2I Food Group worth over $715, and 2.76 shares of GoEasy, which are worth roughly $392, leaving only 1 cent of cash left in the portfolio after investing. Now, Heading over to the dividend tracking chart, March brought in $10.58, coming exclusively from the Morguard North American Residential REIT's monthly payout. And that's enough to pay for a bottle of extra strength Tylenol to help ease your pain from looking at the recent losses. Now, thankfully, April is projected to be quite a bit stronger, and we are expecting to receive $14.61. And then May, of course, will be the big hitter and should bring in well over $17, but we'll have to wait and see exactly what happens there. As for the portfolio's expected yield, if there are no changes made to the portfolio or its dividend payouts, then we can expect to receive $173.35 over the next 12 months, which is up 2.8% from last month, and that puts the dividend yield on the money that I've personally contributed to the portfolio at 4.33%, which is up an additional 9 basis points from last month. And that's all for this episode. But before you go, please remember that this video is not financial advice and that I am not a financial advisor. This video is made entirely for the purpose of providing inspiration and insight into my personal investment decisions, and it should not be used as a substitute for doing your own research. This video does not have the information required to make good investment decisions on individual securities. So again, I am not a financial advisor. I'm just a Canadian who likes to invest and share my opinions with others. And in doing so, I hope that I was able to provide you with something of value. And if I did, then please consider sharing with anyone else who may also benefit from it. Thanks for watching all the way to the end, and enjoy the rest of your day.